So welcome you all. This is our third session on again private equity, but yeah, on expense part this would be a second session. First you can watch it. Already I have provided links, means previous session links in the job description. Just go through it, and then because that session is linked with this one. All right. So in this session we gonna focus on only on prepaid expense part. This session is dedicatedly for prepaid expenses. Prepaid. So we'll see that how that prepaid expenses works and all. So before go ahead with the session, I would like to request you, please click on bell icon if you are new. All right, I know that. So again and again, same thing I'm saying in each and every session. But trust me, without your like, comment, I won't be able to grow. My team won't be able to earn money for their bread and butters. So my job, my everything is which is in stake now, right now, I would say. Because if you like, if you share this content with others, if you love to this content, then only we would be able to generate some sort of money so that we can help, or I can help my team, because all are like students or people who are very poor. So it's just an initiative that I can support to them as well. But that's what again and again I'm saying this. But if you can only at least support or share this content with others, that will help you only. And apart from that, if you don't have, let's say, 40,000, 50,000 for a course, then you can spend money, uh, you know 50 rupees or 100 rupees on YouTube membership. Take the membership and access the lots of content that I have kept it under membership only. So that also you can do. Anyways, now let's start to the session and discuss about prepaid expenses. All right. So if I talk about prepaid expenses, prepaid. See, in a term, if you see, guys, my way of teaching is very different. I always try to make you realize that everything that you would see in that word only. Now, if I talk about if I talk about word like hold on. Mm, okay. So if I talk about pre and paid, paid it means paid it means again, see, as an accountant or think from accounting perspective, paid it means to spend spend money on required service or goods or service, I would say goods or service, right? To spend money on required goods or service, but that service goods or service, I would say, basically goods or service will access in future or next accounting period. All right, next accounting period. So you know it, paid it means to spend already, but here we are talking about prepaid expenses. Prepaid expenses, so it means now here you can relate. So fund manager, let's say fund manager paying expenses in advance, to whom? To the counterparts. Now if I talk about, let's say, counterparts, say in a fund business, what happen, I'll tell you. Fund manager create one entity which is legal entity, so that you can say, or maybe even board of directors of the fund, they create one legal entity and they appoint auditors, right? Then auditors, or let's say fund admins, banks, or other agencies. So here if you see, Fund admin charge, fund admin fees, bank charge, bank expenses or fees, auditor charge, auditing fees. Sometime if let's say auditing firms Apex, they have asked for managers to make a payment in advance or make a payment in advance for their auditing fees. So let's say prepaid make the payment of accounting package in advance for a next 1 year. Now if you calculate, let's say duration would be your the way we calculate how it works. Let's assume it, we have a cycle. It means, see, in accounting we have a 360 days, or I would say 365 or 366 days cycle. So basically we charge expenses to the counterpart for a 360 days in a year. So ultimately, so it means if I talk about, or if I calculate this month wise, so every month will have for 30 days. Every month will have for 30 days. 30 days. 30 days. 30 30 30 1 2 3 4 5 6 7 8 9 10 11 and 12. So let's say basically this is your Jan month. Jan, Feb, March, April, May, June, July, August, September, October, November and December. So this is your cycle, accounting cycle. So basically fund manager will pay every month, let's say expenses for 30 days. For example, let's say if you see prepaid expenses, prepaid expenses, it means admin fees, which is 1200 for year paid. Prepaid expenses, admin fees, 1200 rupees paid per year. So what it means, so your job is to charge, see here on first assume it on 1st Jan, 1200 rupees which has been paid, 1200 rupees which has been paid already, and that's what we are saying prepaid. But expenses which has been prepaid for entire year. See, on 1st of January, 1200 fees which has been paid for entire year. But if you split that 1200 across all your accounting duration, you would see 100 rupees expenses which will incur. All right, basically 100 rupees expenses which will incur, 100 rupees 100 rupees expenses which will incur. So now the point is here, see, first there are two things. One, you will have to do the accounting for 1200 because you have paid that 1200 in advance to the, let's say, your fund admin. Fund manager paid 1200 rupees in advance to the fund admin. So it means as a fund accountant, you will have to record this expenses as a prepaid expenses, because which has been paid in advance for entire accounting duration. Second thing, every month, once month close, because your month will start from 1st of Jan and it will close on 30 or 31st or 31st or 13th of 38th of Jan, right? So every day, because we are going to charge fees for 30 days. So it means here On first of that every month, fund will open and it will close on that end date, last day of that particular month. And once the fund is closed, it will have to charge 100 rupees as an actual expenses. But the point here is already we have paid expenses in advance to the fund administration house for their service. So how can we record that 1200 at a time and then 100 expenses every month? To simplify this, what if I tell you, let's take assumption, fund manager not yet paid any expenses as such, and you have a monthly accounting, right? You have monthly accounting. This is your schedule. This is your schedule. There is no prepaid expenses. Now, if I ask you, let's say today is 2nd Feb, and if I ask you to do accounting for January, how will you do it? Come on, think about it. You will calculate expenses, total expenses divided by number of months, right? 12. So that becomes around 100 rupees for per month. I'm sure you would record 100 rupees expenses here, right? Same you would do for Feb as well. In the month of March, you will record expenses for Feb. So that depends whether it is prepaid or accrued. That's a different story. But in generic way, if I ask you for every month end, means once that particular month is closed, then you will do the accounting for a previous month. So it means in the month of Feb, you will do the accounting for Jan. In the month of March, you will do the accounting for Feb. In the month of April, you will do accounting for March. Again, in the month of May, you will do the accounting for April. So this is how your accounting come into picture. And that's what why we do it, because see, only after month end or after, I would say, accounting period end, so then you can only, you will realize expenses or income so that you can record it in the books of account and prepare your financial statements. But in this case, if you add prepaid, so it means, let's say here, fund manager, the expenses they have paid in advance for a next accounting period. And that's what, first of all, you need to record accounting entry for a prepaid expense which has been paid in advance. And second, every month you can record expenses for that particular month. So it means basically it's a realization. It means first you would record prepaid expenses as an asset side of balance sheet only. And when you record it to the asset side, you can apply depreciation approach. In depreciation, what we follow? We depreciate the value of that particular, let's say, assets and record it to the P&L. So same approach you can also apply it here as well. So first record the prepaid expense as assets, and then every month charge the expenses, let's say 100, and then reduce that expenses from the prepaid expense balance only and record it to the P&L. Until that prepaid expense amounts get zero, you can continuously apply expenses to the prepaid expense account. So that process would be your expense realization process, or I would say it would be your amortization process. And I'm sure in a fund accounting interview, you would expect lots of questions around prepaid expenses, including journal entries and all. All right. So now let's come to the main point, which is accounting entry. What would be the accounting entry in the context of prepaid expense? Let's assume it. We have monthly accounting, and as I said, monthly expenses we have a 1200. Same example. Let's carry forward it. Prepaid expenses, which is 1200, which has been paid, and we have a monthly accounting. All right. So 0 to 13th of Jan. So we'll do the accounting in Feb, as I said. So do the accounting, but while or before entering accounting entries and all, so you will have to ensure first record the accounting for this transaction, and this, of course, in the month of Feb you can do the accounting for 30 days as well. So let's do the calculation first. Do the calculation. 1200 expenses divided by 12, so that becomes 100. 100 rupees for per month, you can charge it. But do the accounting entry for a prepaid expense. Your accounting entry would be prepaid expense, account debit to cash and bank account credit. Total 1200, because on 1st of January, you will have to perform this accounting entry. The reason is fund actually prepaid, it means actual cash out amount is actual cash amount out is 1200. Second accounting entry, so it means in the month of Feb, right, at the time of expense realization, or you can say amortization. In case of amortization or expense realization, your accounting entry on 1st Feb or 1st or 2nd Feb, you will do the accounting for January month. So total January month fees would be 100. So do that expenses. But here now I'll tell you. So you will have to reduce fees from the prepaid expense only. The reason is whenever you record prepaid expense, we consider that expense as a current assets. So it was current assets, but that asset now it should be reduce it by 100 rupees in the month of Feb. So now reduce that. When you reduce that fees, how you would record it? See, now your accounting entry would be expense account debit to prepaid expense account credit. Prepaid expense account credit. So total amount would be 100. So in this case, we are going to reduce that expense from the prepaid expenses. As I said, here you can apply depreciation approach. Depreciation, it means reduce the assets value by that fixed amount, let's say 10%, 5%, 2%, and apply that to the assets. So it means debit that from the assets and credit or transfer it to the P&L. Basically convert assets value into expenses. Same approach you can apply it here as well. Once you let's say complete that accounting period, then you can realize or convert that prepaid expenses into your assets. And that's how we prepare accounting entries in the books of fund as well. So here two more important questions you may expect. One is what is realization of expenses or reclassification of expenses as well. So now if you see, this entry would be your reclassification entry. Reclassification, it means previously it was prepaid expense, it means it was an asset class, right? It was an asset class, current asset class. But once that, let's say, asset converted into expenses, now that becomes expense class, right? So you would see different wording here. Someone will say realization, someone will say amortization, and maybe someone will say reclassification of items. Reclassification of items from asset to expenses. All right. Yes. But again, one more important question is for you. I'll ask this question to you. Does prepaid expenses have any impact on net assets value of a fund? Does any prepaid expenses have any impact on net assets value of a fund? You can update your answer in comment section. Then I'll answer this question, means this question whether is there any impact on NAV or not. I'll answer that in next session. All right. But yes, meanwhile, you can try, do some research, and you can post your answer in comment section. All right. So yeah, this is what we prepare accounting entry in the books of account in case of prepaid expenses. All right. So we'll see you in next session, but don't forget to click on bell icon, and as well as I would say next session would be on your accrued expenses. So don't forget to watch that. All right, it's a series of sessions that I have launched so that you can go through. Thank you very much for watching this. We'll see you next session. Thank you.